We're lucky enough to speak to plenty of experts and financial advisors here in the studio every week, so naturally our watch lists get pretty large. In this segment, we're going to go through some of the companies that are exciting us or piquing our interest. Let's do it, Ren.
Let's do it, Bryce. I've got a couple. Do you want to kick us off?
Yeah, I got one. So we've got a dog, as you know.
Okay. And you've realized how expensive dogs
Oh
are.
my God, yeah. And the second order effect of having a dog is transporting a dog.
Okay. I thought the second order effect of having a dog was starting to think about a kid.
No, that's now further down kick that can down the road. Anyway, we have to transport the dog. Our current car doesn't fit the bloody crate in the back. So have been thinking about, do we need to buy a new car?
I was wondering what
to
was
transport the dog. And it reminded me that when Jess Farr-Jones came in and did her buy or sell, she spoke about Carvana, a company that is in the used car space over in America. Think of it as like I would say a more innovative version of car sales here in Australia. So I wanted to take a look at it.
No, it's quite different to car sales. Car sales is just a...
I'll get to it.
Okay.
I'll get to it.
I was going to say.
So Carvana, founded in 2012. It's an online used car dealership, effectively.
There we go. Yeah.
And I say dealership because they take inventory of the cars.
Yes.
And that's where I think it gets pretty interesting. So they've been on a bit of a roller coaster. Absolutely. Yeah, absolutely booming pre-COVID. And then COVID hit and they got absolutely punished because the used car sort of market dried up somewhat, and they took on a huge amount of debt. In fact, they increased their debt, I think, from about $60 billion up to $30 billion. It nearly put them out of business.
They fell 99%.
Yeah, it was an absolute disaster.
Yeah.
Absolutely disaster. However, they are on a significant turnaround story at the moment. I want to put some numbers to the revenue side of things. So 2021, they were doing about $13 billion in revenue. 2022, pretty flat, very similar. 2023, it dropped to 10 bill. 24, 13.5 bill. 2025, they're on track for 20 bill. So some pretty significant revenue growth over the last couple of years. That's been driven by increasing the number of cars being sold, and that's obviously coming through to their profit line as well. Profit's up, good news story there, and we all know where profit goes, share price follows as well. So the turnaround story is there. But I'm interested in the model here because it is different to car sales.
Sorry. Can you just tell us the share price story? In almost 100 bags since its low, it was up 9,000%.
Yeah.
It's come off a bit,
Yeah.
but it went from $4 to over $300.
Yeah. You've stolen my closing there.
Oh,
but anyway,
okay.
That's
Well,
okay.
we can cut that out.
No,
Okay.
keep it in. But yeah,
I just thought it was crazy you were doing revenue and profit, but not.
Yeah, they've almost 10 bagged, 100 bagged,
100 bagged, yeah.
100 bagged. But I guess just to paint a picture of what they actually do and how they are different to car sales, they're famous for the car vending machine. I don't know if you've seen photos of it, but what they do is if I want to sell a car, they'll actually come and pick the car up. They'll do all of the cleanup of the car. They'll do an inspection. They'll put all of the details of the car online, and then they will take it and house it in their own warehouses or in large vending machines where customers can actually buy the car online and go to a vending machine and pick it up. So they're like drastically reducing the time of which people take to buy cars. They actually do same day delivery if you wanted a car, same day purchase. So yeah, pretty interesting business model and an absolutely incredible turnaround story.
So is there, you know that an Australian version of this IPO'd last week?
No.
Oh, do you know Karma?
Nah.
Oh, okay. They raised 100 mil and listed on the ASX last week.
Really?
Yeah.
And they're doing the same
Exactly
business
the same.
model in Australia.
Yeah.
That's interesting.
Founded in 2021. So obviously there's so many businesses. We sort of see what's happening overseas and we bring that business model here.
Yeah,
But they raised 100 mil at like a 300 and something $million valuation. Shares fell when they listed like almost 10%. But yeah, there's an Australian version. I've seen it advertised as well.
Interesting. Karma.
Yeah.
I don't mind it because like thinking through the process, I find a car online. It's maybe the best car is in Wagga, for example. You have to drive to Wagga, do the inspection yourself.
Yeah.
There's a lot of friction involved in the process.
Yeah.
Where they take the friction out here is they'll say, we have the car, we'll drive it to your house. They even have a 7-day return policy.
Yeah, that's the big thing. The big thing is trust, because that's what stops you buying a car online. It's like, I don't trust that it's going to be quality.
Yeah.
But like their level of assurance that like it's
decent,
good, and also you can return it if it's not. They take
yeah.
that risk, then that kind of greases the wheels of e-commerce.
Absolutely.
Yeah.
It's like, oh, well, if I know that all that's there, I'm likely to spend.
Yeah.
Yeah. Anyway, something that's worth keeping an eye on.
Yeah. All right. Well, nice. I've got 2 companies that we've spoken about that I think are worth talking about. I got one in Australia, one overseas. What do you want me to start with?
So let's stay here in Aussie.
All right. Let's talk about SiteMinder.
Oh, yeah?
Company we've spoken about before. We first heard about it. We first spoke about it on the podcast in February 2020. I went back and looked when we first had Paul Wilson from Bailador on.
Yeah.
So we've known about this company for a long time. When he first spoke about it, it was unlisted. Since then, it has listed. It hasn't done much as a listed company in terms of share price. But I think it's an interesting company. It kind of listed it did list in November 2021. We know what happened after that. Yep. Things fell. It fell about 60%. It's recovered. It's up more than 150% from there, but it's kind of just got above its IPO price in the last couple of months. So what does it do? I mean, some people describe it as like a Shopify for hotels.
Yeah.
It's kind of like you plug your hotel into their platform, and it allows you to manage bookings across the huge range of booking sites that exist now, Booking.com and Hotels Combined and the long list of them all. But it also tries to offer a number of tools to help hotel owners maximize their revenue, to think about like how they're priced on these different platforms, what customer behavior is on those platforms, and how they should they raise their price, should they lower their prices, all of that stuff. So really they're trying to become like an all-encompassing tool for hotels, particularly the long tail of small hotels.
Yeah.
So I had a look at the company because I think it's an interesting model. The past 4 years, past 3 years, their revenue growth has averaged 24% a year. Pretty good. Not yet profitable, but their losses are getting smaller. So the last 4 years, $110 million loss, $49 million loss, and then about $25 million loss the past 2 years. So
have they ever been profitable?
Probably
not.
Not in my notes that I've written down here. But I think it's interesting for a couple of reasons. It's a software business that is, number one, growing customer numbers, and number two, growing average revenue per customer, which is a very nice recipe if it can inflect to profitability. Earlier in this episode, we spoke about Uber and we spoke about Spotify and what's happened as their losses got smaller, and then they hit profitability. And then because software businesses have such great operating leverage, which is where there's a lot of fixed cost, but the cost to add each incremental customer is quite low. And so as you're adding these customers, a lot of the money you're earning from those customers is flowing straight down to your profit line. It could be an interesting story if it can hit that inflection point.
Yeah, I just clearly remember James Abella when we interviewed him speaking about these phases of businesses, and this phase of a business, if you can get in on it, can be super powerful.
Now, it's important to stress that there are other players in the field. So this is a competitive industry. Hotels and travel is a huge market, and there's a lot of players around the world. So that's the caveat. But, we love an Australian story, and so hopefully SiteMinder can keep doing the damn thing.
Love it. Let's see some profit. All right, you said there's one overseas.
Yeah, so I've taken a little bit of a South American tour in some of my stock research recently. Mercado Libre really kicked it off. Here's a fun fact for you. There's one company in the world that has done 37 consecutive quarters of above 20% revenue growth. Mercado Libre. Nuts.
Wow.
Yeah. And then I spoke about New Holdings, the
bank,
the neobank that's in Brazil, Mexico, and Argentina, that's just growing at a rate of knots. And anyway, so that sort of area of research has led me to a third company that I find quite interesting, dLocal.
Okay.
Listed in the US on the NASDAQ, DLO is the ticker. Now, it got absolutely wrecked in the tech sell-off, down 88% in 2022, 2023. But in the past 6 months, it's up 66%.
Okay.
So what it started in 2016. It was the first Uruguayan unicorn.
Nice.
Worth over $1 billion US.
How many others are there?
Couldn't tell you. It listed in 2021, and what the problem it is trying to solve is that across the world there are all of these local payment solutions, like local payment processors and platforms and merchants, and dLocal is a way for like multinational corporations and e-commerce platforms and stuff to plug into local payment methods with a particular focus on developing countries.
Yeah.
So that's what it is trying to do. Past 5 years revenue, just to talk to raw numbers, 104 million, 244 million, 419 million, 650 million, 746 million.
Slowing.
And it's on track to do more than 850 million this year. So that's growing revenue at more than 50% a year on average in that time.
Not in the last couple of years, though.
Slowing, but still over that time, the average.
Yeah.
Not bad.
Yeah.
But here's what's interesting. If everything I've said hasn't been interesting so far, it's been profitable every year it's been listed.
Oh, nice.
Yeah. Now, it's growing profit at 39% CAGR in that time.
Yeah.
So margins are actually shrinking. So that is a watch.
Margins shrinking, profit slowing, revenue slowing.
Yeah.
Yeah.
But you know, it's getting bigger.
It may have done its dash.
No. And then the final point that I find interesting, it's led by Pedro Arnt, who's the former chief financial officer of Mercado Libre.
Ah, nice.
Yeah.
So got some good pedigree.
So some pedigree there. So my South American tour continues. All of this is in aid of an eventual Equity Mates South American trip.
Love that.
Yeah.
Let's get it done. Let's get it done. I should close out. It is still the only $1 billion company in Uruguay.
Really?
Yes. As far as data can show, beyond what some private companies may be valued, but from what I can see, it's still the only one.
There you go.
Love it.
So look, that's 3 companies that we've found interesting or that have popped back up onto our radar, but there's always more companies, always more investment opportunities we're learning about, that we're hearing from fund managers and from advisors. So if you want to keep learning with us, subscribe wherever you're watching or listening so you don't miss an episode. But Bryce, that'll do us for this episode.
Sounds good.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.